Hello everyone, this is today's video analysis for August 14, 2019. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. Starting all the way out here on the weekly time frame today, I wanted to get a significant look back in past because we know that we're at significant support levels for the US yen. We're looking all the way back to the beginning of 2018. The blue circle, vertical black line on the left hand side, you can see the market found support between the yellow, green, and blue shaded areas down here at the bottom and began a significant uptrend, pushing all the way back up into the mid 114s. Then it came back down. We had this anomalous spike that came all the way down here in December, down into the 104.65 or so level, spiking down here and then returning back higher. And now here we are once again, challenging the yellow, green, and blue shaded areas down here at the bottom. So it's been a major history around, well, let's just call it between 106 and the mid 104 level down here at the bottom of the weekly time frame. So that's important for us to remember. Let's go ahead and take it on down to the daily time frame. We can see what's been happening over the past couple of weeks. A push lower, a major push lower as the market pushed all the way down, falling from the 109 level down into the 105 level, the green shaded area down here at the bottom of the chart. So it was a major push lower. Then just a couple of days ago, we saw a major rally on the US yen as trade talks and talks with China improve, and we see the US dollar rally significantly, pushing this from 105.20 all the way up to the 106.90 level. Profit being made on that run as we took along into the green shaded area. Out of that trade at the current moment, but looking for new opportunities here around the yellow shaded area, 105.70.90. Interesting area here. Let's go ahead and take it on down to the 4-hour time frame. It gives us a better look at the price action we've seen in the past recent days. Let's just look at this support right here, right around the yellow shaded area. You can see that blue circle right there showing significant support into this yellow shaded area. Then, of course, it got underneath it, targeted down here at the green zone where we actually took the long, and we saw that push back higher. Now we're coming right back down here in the yellow zone. So we know historically the yellow zone has been support before. So that shouldn't be a surprise to us that if the market is looking for support, this may be the place for that to happen because blue circle shows we've seen support here before. I think first things first, when we're talking about trading decisions, buy, sell, buying or selling, right now doesn't really improve our chances for selling. We don't want to go short as it sits down here on top of 105.90.70, the yellow shaded area, because of the important support that we've seen here before. So I don't think selling right now or today makes a whole lot of sense. Probably the only real reason to go short would be that it finally was able to get back under that yellow zone 105.70. Then you could maybe take it down here to the green zone as the next area of support. So selling probably not on the table for the day today. On the table may be buying as it sits on top of here as support, like you see back here on the left. We may have an opportunity to buy it. Something else interesting that I looked at a little bit ago, and I think is important for us to look at now, is Fibonacci. Fibonacci from the lowest low. Let's just go all the way down here at the lowest low to the spike high that we see here on the chart. And Fibonacci, lowest low to highest high. And really, you could, if you really wanted to bring it over here, you could that as well, or even this just the one candle, but I think we can go here as well. I think this is interesting. 105.78, 0.618 Fibonacci retracement level of that run. So low to high, 618 sits here at 105.78, offering us another clue to support here in the yellow shaded area. So as long as it stays above that 618, the retracement point of Fibonacci, and the yellow zone, I don't think this is a good opportunity to go short, but maybe long opportunities will present themselves as we go through the day today. Some sudden infusion of buy orders here if we see it dip into here and all of a sudden the buyers come back in, leaving a long wick at the bottom of the candle, or the next period we see a long blue candle. That may be an opportunity with some higher confidence that it's going to go back up. Look for support for the USD. Look for a rally on the USD. That would be things that we can improve the chances that this is going to bounce and go back up. If you decide to take a long, of course, not too hard to know. Your risk is underneath. You don't want you don't want it to get underneath there if you decide to take a long shot here. So stop losses under the yellow zone. How deep under there depends on your own personal risk strategies. It could be closer or farther depending on your risk strategies. I'd probably say we look back to the blue circle and know that we would probably want to get underneath those two spike lows there if we were going to put a stop loss down here. But also knowing your target, the pink zone or higher for the dollar yen. The worst case scenario, it breaks the yellow zone, continues to go lower for any longs that you might take on the dollar yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.